What causes price to react to certain order blocks and not others? In this video, I'm gonna show you some secret key levels that the order blocks react from. And using this information, you're gonna be able to take trade from those order blocks or targeting those order blocks or areas. So stick till the end because I'm gonna also be giving away the indicator that I am using. I'm gonna be showing you how to get this indicator. So we're gonna go through the examples together. Okay, so this is the example I'm gonna be using, and if you don't know what these slides are, you can check in my previous videos. I'm gonna put the link up here so you can go ahead and watch and see what these lines represent. I'm just gonna tell you the lines that I'm gonna be using today, which is this is midnight close, New York midnight close. This is New York open. This is the orange one is New York Stock Exchange open. And as we can see here, I'm only gonna be using 1 hour and below. I'm not gonna go higher, so we can keep it simple. As we can see here, the price comes like that and goes higher, okay? And then it breaks structure. So now we are bearish. Don't ignore market structure. Market structure is the most important thing. This is fundamental in any strategy, and if someone tells you that it's not important, just ignore them, because market structure is the most important thing. And as we can see here, 1 hour is bearish, which gives us a sign that the price wants to go lower. Now if we go to the 15 minutes, we can see that we are bearish right here. And then when New York opened, we did another break of structure to the downside. Okay, then what happened is New York Exchange opened at 9:30, and as I showed you on previous videos, the New York Stock Exchange always goes back to the New York open. Okay, most of the time it retraces back. If it left it, come back at a later time. As we can see here, the price comes back to the New York open. Also, it goes up to the New York midnight. In our head, logical way, what does that mean? This means that the price is taking out the higher liquidity in order to continue lower. If you notice here, we have resting liquidity right here, which is the reason for this liquidity graph. So we have a liquidity graph. We have the price retracing back to the key level right here, okay, and we are bearish. Now, what do we need? We just need a change of character on the lower time frame. I'm gonna use the reply mode right here so we can see what happens exactly. The price comes back, it takes the liquidity. On the 5 minute, we are not breaking structure, we are not changing character yet. On the 5 minutes, we are already bearish because as you can see, we have 1, 2, 3. Now we went above this area, which made us bullish. But we're gonna see now on the 1 minute what happened. If we go to the 1 minute, up till now we are still bullish, and don't mistake that, because we did a low and a high, and now we did this low, so we need to break this area right here, basically better this area right here, which is the lowest, in order to see a change of character. But right here also is a sign, okay? When we close below it right here, this is a sign that we're going lower. So you could be aggressive and take it from here, or you can wait till price break below the low right here. So now we have the change of character. So now we can take our trade from this area right here, or any retracement that goes higher, so we can target our lower targets. And from the lower targets, I'm showing you how to target those areas. 2 methods. So as we can see here, this is our retracement. We take our trades from here, we put it above this high right here. Because if the price goes above this, then our trade is invalid, and then we wait for another entry. We take our trade from this area, I would put it here at our gap, stop loss right here. Okay, so the price just keeps going lower. Okay, you will never get this kind of entry. Let's be realistic. I'm gonna put it right here, and then the price just goes below. And okay, my target was here for the first trade. I'm gonna show you another example how we could enter again, but my target was here for the first trade. If I put my fib from here to here, this is aim exactly to the 0.79 level, which is the OTE. Okay, and we can see how it respected the fib completely. It came to the 272 right here, and then it came to the tick 618 right here. So we're gonna see which one makes sense to us, okay? We're just not gonna rely on fib only, we're gonna see which target makes sense to us. Okay, so from here we can see that we have this red line, which is London close, and in my next video I'm gonna be talking about London close because it's a big part of my strategy. It's a big key level and it's very useful. So if you are enjoying this so far, please considering to like the video, subscribe, and just turn on the notifications for the next one, because I'm gonna be dropping a lot of value on the next one. Let's continue with this one because all of them for it. So now we got our entry, we got our trade done, and we can actually target the London close. We're gonna see what happens now. This is in hindsight, yes, but I took those trades yesterday. I can post proof at the end of the video. And now we can see that the price is retracing, okay? And while it is retracing, you should see that the price is making engineered liquidity, okay, to retrace back where? Look at this. If I put my fib again, another OTE right here with a very high probability, because we can see that it came back directly to our order block. And that's what I'm explaining, that having the order block on this key level, secret key level that I'm talking about, makes it higher probability, because we understand that there's a lot of orders there. That's where the price started, okay? That's where the move started. With imbalance and with liquidity grab, it makes it even higher and higher probability. And we have here our OTE entry basically. So we can just take our trade from this area, put our stop above, and put our TP either to here. This is our OTE right here. This is our entry from here, and this is our target. This is our first target. This is our first target, and our next target would be, as you can see, we can target this one, or we can target, this is the weekly high, which I love to keep on the chart. We can target this area right here. So first TP, second TP. Okay, so the price came back directly to OTE, and we saw a reaction right here. We entered the trade based on that, and we're gonna let the probability play out. We went directly to TP, but there are many key levels to look for. Okay, what are we looking for is, as you can see, the price came back right directly to the midnight. It came back and respected the New York right here, and those key levels are not usually visible to us because we do not put them. So if you want this indicator that I'm using, as I promised, I'm gonna give it out for free. You can go down to the description of the video, there's a link to Gumroad. You're gonna go there, and it's for free, so you can just put I want this for $0. You can just add $0, and it's gonna show you how to install the indicator. Okay, so this is two entries, two ways that you can see the entries. And the bias comes from where? The bias comes from first, market structure, and second, that we are already taking all the liquidity from those areas. Market moves just to gather liquidity, and we took the liquidity from here, we took the liquidity from here, we made the engineered liquidity, we removed all the imbalance, and then we are going lower to another levels of liquidity. If we go higher, we can see all the imbalances right here. But as I mentioned at the beginning, the reason why those areas are higher probability because they exist as the key levels, okay, at the opening of the session, which all the big volume stays and relies, and especially if many sessions are at the same location. I explained about that more in my previous videos, how the market decides the direction, so you can go ahead and watch it. I'm gonna put the link up there again, and this gets us to the last part of the video. So guys, I'm offering you the free indicator. I already offered you the Notion template in order to journal. I gave you a checklist in order to know, put your thoughts for the trades, put your checklist. Did we break structure? Did we reach our area of interest? Did we have the chalk? I'm giving everything away for free. You can see it on my videos. So I hope you would subscribe and like my channel. I'm gonna see you on the next one. The next video is gonna be so precious. I'm gonna talk about the session close, London close, how the price reacts to those areas, And there's especially one setup that happens every Monday. I'm gonna talk about it in my next video, so put these notifications on. If you're interested to finding out more strategies and how I use decision opening, you can go ahead and watch this video right here.